Good morning. My name is Brad Langille, CEO of GoGold Resources, and we're a Mexican-based producer and explorer developer. We have been producing from tailings for now in our 11th year in our Prowl project, which is a cash generator for us. At the same time, we've been doing what we traditionally do for the last 28 years in Mexico, which is explore, develop mining projects. We have bought, sold, built over those 28 years. And next year in 2025, we're shovel ready once we have a permit in hand to build our next mine, Los Ricos South Mine in our Los Ricos district.
Sure. Hi, I'm Niël Pretorius. I'm South African. I work for DRDGOLD. I've been the CEO for approximately 17 years. DRDGOLD is situated in Johannesburg. It's also listed there. And we also have an ADR program on the New York Stock Exchange. The company is 129 years old, but for the last few years, we've been focusing exclusively on the retreatment of gold tailings in and around the Johannesburg area, producing between 155,000 and 170,000 ounces of gold per year. This year, we're targeting just over 5 tons of gold. And I think one of the standout features of our company is that we are moving ever closer to a circular economy model because we do not produce any new waste. We use mostly recycled water for treatment. This year, we completed a 60 megawatt solar plant. So about half of our electricity is from the sun, which has shrunk or will be shrinking our carbon footprint by about 50%. And then the land that we clear, we don't redeposit there, so that land is released for sustainable land use.
Thanks, guys, for the intro. Right, today we're going to talk about gold and silver, precious metal environment, and water environment. It is again. You've got a few things in common as well. So, I mean, Brad, you both operate tailings, but tailings aren't always just tailings. I mean, tell us about what you've got going on there in Prowl.
Yeah, that's interesting. Interesting. You can find two people in our industry who are reprocessing tailings. It's a kind of a rarity, but one thing that we've done a little different than what Niël's doing, I think, is we've we made it work, an agglomerated heap leach on old tailings. Our tailings were deposited over about 300 years. They have a lot of silver in them versus just gold. So that makes the metallurgy a little bit different. They're more than half of our value is coming from silver, but very low cost of operating with a agglomerated heap leach. And also, we're operating in a city of 135,000 people where we're moving these tailings out of the city. So these tailings have traditionally just been laid on the ground over 300 years. So a lot of what we do is really it's a reclamation project for the city as well, and they're our partner. We pay them about $75,000 US a month, and that actually represents probably 5 to 10% of the municipal budget. We move those tailings outside the city by about 15 kilometers, and we deposit them on, at a 21st century environmental standard that would be the same as, US, Canada. So that's what we've been doing a little bit different. At the same time, we're developing our Los Ricos project in Jalisco.
Of course, yeah, and we'll talk about that because it's slightly more a conventional project. But Brad's Prowl project sounds a bit familiar, doesn't it?
Yes, no, absolutely, it does. I mean, our operations are basically situated in the middle of the largest city south of the Sahara. Johannesburg, incidentally, is the largest city in the world that's not on a river, and it's because the city grew where the largest deposit in the world. Sorry, I'm saying largest a lot, but it is the largest single deposit of gold in the world when it was discovered in the century before the previous century. So gold mining's been happening there for more than 120 odd years. So there's a very large concentrated deposit, several 100 million tons of mine waste that's been accumulated over time. And we now get the opportunity to, right at the end of this cycle, we get to mine it again. And of course, the city didn't develop initially in an organized way. So it's a little bit too close to some of these old storage sites, waste dumps. So by clearing it, one's also contributing to, I suppose, opening up land in the first place that could be used for residential and industrial development. But you're also taking away a source of nuisance, of environmental and health nuisance. So altogether, it's sort of, I suppose, completing the circle, the sustainable development circle. Johannesburg's no longer a mining town. It's become an industrial, banking, financial services town. But there's one part in the sustainable development composite that's never really been addressed fully, and that is the environmental aspect. And by moving these dumps away and opening up all of that land, I suppose that fifth element of nature capital is now also being given effect. Johannesburg's becoming a textbook example of what sustainable development's all about.
Right, but at the end of the day, you've also still got to show that you're making money and with your project. Can you just talk us through sort of the technical merits of how you go about doing that?
Yeah, absolutely. I would have loved to be able to say to you that 20 years ago, we decided that we're going to focus on establishing a circular economy model that has the effect of cleaning up the environment and so forth and so forth. That's not really the case. It's a happy consequence of what was left for us to do. The only resource that we had left that we could mine were these tailings, because the underground mines that we owned at the time were old and they were getting more and more challenging to mine at a profit. So this is where the potential cash flow for the business was going forward. But it became apparent as we got deeper into this model that we had to attach it to something. There had to be some sort of a philosophy that guided our strategic thinking. Sustainable development turned out to be the ideal model to pursue because it's right there in the middle of everything. You cannot mine without affecting the lives of the people around you. And there are also the environmental consequences that are almost multiplied because it impacts not just on the environment, but also the people living in that vicinity. So we really had to focus on getting all of these things right and embedding what's now being termed ESG, but in those days was simply just social and environmental capital and the governance platform that drives it. We had to embed that early on in the financial model, and it had to contribute towards ultimately also the financial sustainability of the business. And it ended up being really a pursuit of economies of scale. We had to build infrastructure that was large enough to process material at the requisite throughput rate in order to cover the ongoing costs. And we're on either side of the volume and extraction efficiency continuum. We're an ultra volume mine, and we do nano extraction because we're only recovering about 200 parts per billion parts that we push through the plant. So you've got to put massive quantities of material through these reduction works in order for it to work financially. And it has. We've been paying dividends now for 17 years without interruption. So we're very much a cash flow focused operation. And that's our primary, I think that's our primary objective is to generate net income and to apply it in a particular way so that we can cover all of the other sustainable development capital stocks.
That's interesting. And Brad, I kind of flipped that on its head for you, Brad. I mean, you saw Pearl as a means of generating revenues to get through the kind of exploration phase at Los Ricos, North and South. And yet it's still got that benefit to the town. You talked about moving the ore, was it 15 kilometers away? Does that sort of buy you brownie points? Is there kind of ESG? Is there a sort of social license which you gain from that up in Chihuahua?
Yeah, no, that's very true, and I think where we probably differ a little bit from what Niël's doing is, your total focus has been on tailings and great, opportunity, and of course Johannesburg, where you have so many. For us, we over the last 28 years, like I mentioned, we have been working a lot with private families in Mexico who had kind of off the radar assets, and we've been able to get the capital and develop those assets. And this will be mine number 5 that we built here. And you're right with the environmental authority in Mexico. I mean, they really do love the Pearl Tailings Project because, as Niël mentioned, a lot of the mines the same in Mexico. The communities grew up because the deposit was there, and they built mines around these cities around these mines. And going forward, I mean, Pearl is working very nicely now. Going forward, we have looked at a lot of these other cities and where they had mines and these old tailings. So we've cataloged some of them, and it's not a bad business at all. And if you can generate cash, and in fact for us, we look at Pearl, and most mines we know they take a long time from discovery. In the typical mine, from discovery through all the stages of studies. At Los Ricos, we're in the definitive feasibility study stage right now, and we've been there for about 6 years. And that's fast track. But you look at Parral, and that was real fast track. You got a bunch of tailings laying on the surface. You drill them, pretty quick to do. We put together a pre-feasibility study. We looked at originally. We said, hey, this grade would be great for a heap leach. What would it work? And we went through all the testing. Some in-field testing kind of made it work perfect, but yeah, it worked. And it's nice to have that cash flow generation while we do what we traditionally do. And Matthew, as you said, it does score us some real points with the environmental authority, because it is a solution that is both good for our shareholders, good for the community, and great for the environment, to clean this up.
Right, and I know federally that definitely helps you. Does it help you at a state level? Obviously, Parral's up and Chihuahua and Los Ricos is down and Jalisco, different states, and quite far apart. Does it help at a more district level as well as the federal level?
Definitely for the state. I mean, and the state of Chihuahua in particular. Over the years, we've spent billions of dollars there on some of the projects. I mean, one of them is behind my shoulder here. This was the first one we built in Chihuahua, which it was a 250,000 ounce a year producer. So, we've employed a lot of people over the years in Chihuahua. So more, kind of that's where our country office is. But we've worked all over Mexico and down in Guanajuato, we've had mines, and in Nayarit, we've had discoveries, and Sonora, we had projects that we, again, off the radar, we found, we bought for $9 million, invested 11, and then 3 years later, we sold it to Agnico Eagle. And Guanajuato, we had an old mine that operated for 60 years. We revived, bought it for $20 million, and then 3 years later, we sold it, or a couple years later, sold it for $375 million. So we do what we've always been doing. We have a formula that really works for us in Mexico. We're not new to Mexico. We're pretty ingrained in the mining culture there, and know the country. But the tailings really help. We love having that cash flow, and projects that are quick from drilling to building to producing, quicker than anything else we've ever seen, to get that to Parral in production.
Absolutely, and Niël, I'll come back to you. You used the kind of phrase earlier about the kind of the circular economics of your project, in the sense that it's kind of almost kind of closed loop in what, and that's what you've been driving towards. But when I look in the broader context of mining, and I look at some of the unfortunate things have happened in the last few years in terms of heap leach collapse, tailings collapse, economic studies going wayward, companies going bust, even after they've started mining. There's a long sort of track record of value destruction, but behind that also sits this kind of slight distrust from the sort of younger generation coming behind and going, well, it's mining, isn't it? Projects like yours have got to help because of that kind of the way that you've structured this. Do you see either yourself being able to kind of transfer some of this knowledge elsewhere for your own economic benefit, or other companies following suit and trying to do this kind of closed loop system?
We do, Matthew. I believe that I think that the approach that most large corporates that they're taking now is changing, because in the past, what you would find is that as a company sort of reached the, let's call it the mature phase, not the company in operation, as it reached the mature phase of an operation, it became non-core. And then typically, it would be, in many instances rather, it would be sold. Very few companies actually closed operations. That they would rather on-sell them to emerging companies, startups, and so forth. And in many instances, what we saw, especially here in South Africa, is that many of those companies hardly have the capital to invest into unlocking the remaining value of that operation, let alone the ever-growing gap between what was needed in order to bring about complete rehabilitation and the revenue potential of that business. So there are loads of let's call it mining shipwrecks scattered across the landscape here and in many other parts of the world. But what's happening now is that in many instances, because of not so much enforcement and compliance, but because of activist law firms and society generally being far more aware of their rights, the right to live in a clean environment, not to more and more of the originators of the mess are being hauled before the courts. There are instances where companies sold operations decades ago, but they're now being sued in sophisticated jurisdictions like Britain and being held to account. So sentiment's changing. And in addition to that, I think there's a new generation also of leadership in mining. Nobody nowadays really wants to be associated with bad environmental governance because you've got children and you've got grandchildren, and you look at the environment different, maybe through a different lens and a different kind of awareness than what may have been the case 20, 30, 40 years ago. So as a consequence, you're finding that more and more corporations are nowadays looking at rather closing operations as opposed to on-selling them to emerging miners. And the problem is that your typical economic model, concurrent rehabilitation and bringing about closure so that rehabilitation is completed as and when revenue comes to an end, that's never really been factored in. That's not part of the thinking. That's not the framework within which we think when we design and plan mines. And we believe that there's an opportunity for companies like ourselves that have developed the ability to unlock the latent value in mine tailings when you combine them with sunk capital and you apply those proceeds towards exactly that, namely this cost that wasn't really planned for, that didn't really feature in the model. So we believe that this model can be applied to bring about closure, to the re-establishment of ecosystems and an improvement in biodiversity, and that it can be done without hurting the balance sheet, and that it can be done without diluting shareholders out of their legitimate expectations of earnings, because a latent source of revenue could be activated in order to delivering to that. So there's certainly potential in that. And that is something that we're seeing as we go along, because we have to apply the principle of concurrent rehabilitation. We don't wait until the end of a reclamation site to start cleaning up that site or reclaiming that site. We don't wait until the end of mining before we start cladding a tailings disposal facility or a tailings storage facility. We do cladding and revegetating that facility as we go along, so that as and when the mine comes to an end, in the one instance, approximately 14 years from now, and the other instance, approximately 23 years from now, this is added lives of mine because of a variety of reasons. At the time, what we are leaving behind would be something that is manageable with what is left in terms of resources. And that's a different way of thinking. And I think that thinking can be applied on a much broader scale in the industry.
Is there anything that you do which is so technical that will require it's almost a barrier to entry, or is it a case of if there's a desire and a will, it can, as you say, it can pay for itself, and therefore maybe people should include it into their planning in terms of the economic studies?
Yeah, I wish I could say that this is there's some sort of that
black art.
Yeah, yes. But it's not. It's really just looking through things through a different lens of bringing, once again, just studying sustainable development and applying those principles as you go along, so that what you do in terms of nature, what you do in terms of society is closely aligned and integrated with what you do with your operations, so the one feeds into the other. It's open source. I don't think we've got anything that's proprietary. Perhaps our approach is a little bit different, because when you do mine at this level, at this scale, you do have to mine, or you do have to manage your plant infrastructure, your production works proactively towards very specific ranges. It's not like making a pasta sauce where you could taste and add a bit of spice. You got to set up according to a very specific remedy, but rather a very specific recipe, because the mistake you make today will manifest 3 weeks from now. So you've got to proactively mine towards very specific and very tight ranges in terms of all of the material dynamics within the system itself. And for that, you need a different kind of monitoring, and a lot of that is based on technology. There's a lot of digital monitoring. There's a lot of technology involved in making sure that you keep this thing in balance, that you keep it in stable state. It's not flying by the seat of your pants. This is instrument flying in its purest form.
Right, and Brad, for you, if I look at the Brave New World in Mexico now, Claudia Sheinbaum in place, she seems to have removed that kind of not offending clause, but that clause 87 from her 100-point plan. She's got a sort of science background. She's just got an understanding of what you guys need to go through. And do you see the kind of, either with the kind of tailings experience, or having to having had the time to kind of go through your own EIA kind of process and studies on the ground, do you see a sort of chance to get on the front foot with this new government?
Yes, I mean, we're very happy to see the new administration in, and a lot of the things that she's putting forward are, she's considering all stakeholders, as we all should. And you think about that clause 87, a ban on open pits. I mean, the dust has not totally settled yet, but when you go back to that and you think about, as a group, we're a group that a lot of times we've taken grassroots projects all the way, and very early on in a project, and you look at it and you say, if all you're saying, what's the best economics, and you're not really considering the social impact, and you're not really considering, for example, our project can be mined as a bulk mine underground, or can be mined as an open pit. And in our Los Ricos South project, I mean, it's close to a small town. And if we have a 9-to-1 strip ratio open pit, guess what? That's the best NPV. Now, in the current environment, we would have opted anyway towards a bulk underground mine because we want to be removed from that conversation about no open pits. And I don't think we're going to end up with no open pits in Mexico, that being the law. That wouldn't be practical, really, when 60% of their industry is open pits. But again, the social impact, all stakeholders, and you say, well, okay, the NPV is going to go down a bit. You have an underground mine, bulk mining, best practices. We're re-injecting a lot of the tailings underground and paste backfill. What we're leaving on the surface is dry stack tails, the very best practices. And, our community program and the buy-in from the community, we have the community petitioning to get us a permit quicker. We're all on the same page. So if all you're chasing is the very best NPV, but you're not taking that into account, you're not going to have that community support. And really, I believe the new administration in Mexico, they're just wanting to make sure the benefit is there for all the stakeholders, that, the employment, has there been thought about, housing, you're bringing a whole bunch of people into an area where there's a small population, has there even been thought about housing and what have you, and, the total impact. So we're not so much on a different page, I'd say, than the new administration coming in. And we're excited to see that they've eased up on that clause 87 about banning of open pits. But ultimately, nobody had to tell us that there's areas where you can build a big open pit, and there's areas where it's going to be too sensitive, and it's time, probably earlier on, to change your approach. And in some projects out there, even in today's commodity price, that the margins are just too thin and the impact is too much, and you have to go look somewhere else, right? So, yeah, we're actually excited the way things are going in Mexico. We're not. We think this new administration will be very much more in line with our thinking.
Right. Now, see, you've made a lot of discoveries. You've been working in country for plus 25 years. Yeah. Made a few discoveries. Got projects which have been built into mines. Was it easier back then? Is it harder now? And I've got to ask, do you welcome some of this oversight and some of these demands on how you go about putting the studies together to get these things into production?
Yeah, I would say that in the past, the regulation may have been easier, but the fact that the regulation was easier, and if you didn't take in consideration the community and the impact, you're going to end up at an impasse anyway. Why we've been so successful building mines and developing projects in Mexico is that a lot of, before it was called ESG, we were doing that anyway. We had our own program anyway. We knew that's the way you get mines built. We knew that you can't be fighting against the communities to try force a mine down their throat. And the regulation. I mean, the regulation may have been easier before, but we know that you have to be responsible in what you're doing if you want to build mines in people's communities, especially as an outsider from outside the country too. In particular.
Well, I think Scheinbaum has said that there's no need to worry. There's a room full of foreign direct investment CEOs. There's no need to worry as long as you follow the law. Niël, I've got to come to you. So this whole I love what you do. Really, that kind of closed loop thing is fantastic, and I wish more people did it. Accountability in this space. Do you think there's enough? I've seen a lot of pressure groups like getting after the mining space in the last 10 years. And some of it quite vociferous and some of it quite sneaky. But the bottom line is it's putting pressure on mining companies to become better. Do you think there's enough accountability now, or do you think we need more?
Look, I don't think that we're seeing the successes today as opposed to the relative proportion of failures in the past. I think they're definitely much better outcomes today than what we had in 10, 15, 20 years ago. I don't really think that's because of pressure. I don't think that's because of better regulation or because maybe in some instances, but I honestly believe that the mindset of corporates has changed over time. I think that there are more and more senior executives and boards and companies that just have a different value system, or they just look at these things differently. So maybe what the pressure groups have done in the past was create awareness, and that's a good thing. Why would people think that you are acting with bad intent when you're not? Well, if you study what they're seeing and you look at it through their lens, then maybe it becomes more and more apparent, and then you change your ways. But I think the successes today are attributable mostly because of a changed attitude amongst corporates themselves, a different sort of sense of societal responsibility and environmental stewardship. Make no mistake, sometimes it's convenient to forget about something that is 50 years in your past. Many mining companies are 50, 80, 100 years old. You don't really want to be reminded of your past failures, and the class action lawyers are very good at reminding you of those little mishaps by just launching actions, and the judges are quite prepared to entertain those actions. So the environment's changed. It's fascinating. If you look at what the World Gold Council is doing at the moment, and I think they're really driving the initiative. There are a whole host of other participants as well, but there's a drive now to standardize certain codes in terms of environmental practice, in terms of mine tailings, standards of management, etc., etc. And these are organizations representing hundreds of operations who are wanting to self-regulate and who are engaging other stakeholders in this process in order to be able to say there's credibility in this, there's integrity in this process, because it's not just something that we cooked up and we're now presenting it to you and say, now you should be happy and, we believe we're entitled to applause. We've actually engaged on a much wider, into a much wider arena audience. So that's how I think miners think nowadays. It's different. In the past, I remember in the early days, I've been involved in this industry 25 years. And I remember in the early days, there was this sort of attitude of we're doing the world a favor because, we're producing all the metals for economic growth and so forth and so forth. I think the thing that strikes me about modern day executives is there's a humility which you didn't really see a few decades ago. The princes have become serving leaders. They're no longer princes. And I think that's been the biggest change. I honestly do.
Okay, I mean, and Niël, if I look at your business, it's all around engineering efficiency and profitability and effective allocation of capital, etc. You're eking out every single morsel of value there. So you're not forgetting about the money component, but and it's one of the strategy points that you guys push a lot is about adding quality to life. And you just don't mean your employees, do you?
No, not at all. And once again, I do believe that you could bring it into, you can contextualize it in terms of ultimate shareholder return, because it's very hard, if not impossible, to conduct a business in an area where there's a state of anarchy. So the ease of business is almost directly proportionate to the degree of civil peace, so to speak. So and if people are being left behind, if they're not being, if their quality of life is poor because they are poor, because they don't have jobs, because they don't have opportunities, because they don't have services, and right next door there's a company that's perceived to be doing well, there's going to be a resentment and bitterness. So by providing opportunities for these communities to also self-empower through sharing the knowledge and creating opportunities, increasingly you contribute towards a society that's far more stable and that poses less of a risk to your operational stability and a safety risk to your people and a crime risk to infrastructure and so forth. One company is not going to solve all of these problems, but the very least you could do is to just make some sort of a contribution that makes it a tiny little bit better, as opposed to taking an enclave mentality into this environment, putting up higher and higher and higher fences and keeping them out. It just doesn't work. And nowadays, where consultation has become a far more important part, it's become an important part of social license, and social license is an important part of obtaining licenses just to operate. The fact that you have a presence, that you have a network, facilitates consultation. And because they know who you are, and hopefully there's already a relationship of trust. And if not, you're not going to win over the heart. You're not necessarily liked, but I think you're not mistrusted, or there's fewer people who mistrust you because you're a known presence. And maybe you've added some benefit to their existence and their quality of life. So at the very least, it facilitates consultation. So when you then do apply for licenses, you can say, but we've gone through the consultation process, and that's an actual process. It happened right there where people live. And that's where it starts paying off. So it's definitely not charity. It's definitely not just a cost. It's something that I believe ultimately does deliver into the financial bottom line. And that, again, is the essence of sustainable development. Everything needs to sort of contribute in a manner that's almost reciprocal, and that's overlaid towards the value of each of the capital stocks.
And Brad, how did you achieve that? You said at the beginning that you had some of the locals actually appealing for your permit to be given. Is that purely a financial consideration? They think they're going to get jobs. They think that money will roll into the district. How does it work?
I've been sitting here listening, and I'd echo many of the things that Niël is saying as well. And I think and you asked before, what was the difference, 28 years ago coming to Mexico? And I'd see the companies then, it would be, hey, we're going to build this project. We've got a checkbook. We're going to bring jobs. So that's it. That's your kind of social look at the whole thing. And then you're going to go in there and start banging away at the project and ripping and tearing, and you're going to see where things are going to land, right? And that's probably a recipe for failure, right? And it has been a lot in the past. So yeah, definitely the focus has changed so much towards that social license, buy-in from the community, thinking about all the kind of ramifications of coming in and spending all that capital and bringing those jobs, but what are the social consequences, and going through and thinking of them all and trying to get ahead of it all. And
right.
I think that's the biggest thing that's changed.
Yeah, I think for me, I think there's been a great conversation, because I want to remind people this. I think there's been a slight sort of rebellion against the ESG badging, which happened over the last 3 years, and we all had to use the words. So you talk about the phrase ESG. All good companies have always done it in the right way, because it guarantees success, not only in terms of getting things done, but to the bottom line for sure. And you guys are doing that in space. just want to finish off. Look, it's a really super exciting gold price environment. Bouncing off the $2,700 mark on a regular basis. It's clear that there's money to be made. Does it change the way that you operate, you plan, you are scheduling things because you want to take advantage of this environment, or is it business as usual? I mean, how do you come at it?
So the one business unit that we have where the tailings treatment is really focused, had a 12-year life of mine from 2008 onwards. As we got closer to this, let's call it the end of life, we realized that we don't really want to stop because there's still lots to mine. And at the time already, the gold price environment was changing. It did seem as though there was a different dynamic globally in terms of gold, the price of gold, the buying patterns, the investment patterns of gold. We're no longer as vulnerable to sentiment in the West anymore because, there were other areas that sort of stepped in and started accumulating. And so we reset our thinking. We started positioning ourselves to really extend life of mine because we hadn't run out of resource. There were certain parts of infrastructure that was going to become constrained, in which we had to invest. What this is helping us do now, I believe, because as much as we want to believe that the gold price is never going to go down again, it probably is. But now is a good time to make sure that whatever infrastructure you need in order to mine successfully and sustainably at the time when it does turn, that infrastructure is in place. Now's the time to really accelerate some of those programs. So we have a capital reinvestment program, one that's aimed at extending the life of one of our operations by approximately 14 years. And it didn't start now, it started a few years back. And the other one would extend the more newer operation by approximately 23 years. And the capital investment in today's numbers is roughly, if you asked me 3 weeks ago, it would have been 75% of our market cap. And today's numbers with the gold price rally is probably closer to 55% of our market cap that we're reinvesting over the next 4 or 5 years towards this future. This gold price is helping us to fund that out of operational cash flows and having to take on far less debt than what we had initially planned to do. So that's the main thing for us. What we're not going to do now is at the top of the cycle start, rush out and start buying assets because we can. I don't think we want to do that.
Okay. And Brad, for you guys, obviously you're about 60-40 silver gold, aren't you? Silver's been a nice run, but again, bouncing off of $32 on a regular basis. Very nice indeed. For you, DFS stage at Los Ricos South, and obviously in Los Ricos North following up quickly behind. Does it change your approach to, I guess, how you come at the financing, or how you come at Los Ricos North?
Yeah, for us, it's great. The commodity price is going up, and it's changing the sentiment. And it's interesting as well. You look at $2,700 gold, and if you'd looked at that a couple of years ago, you would think the companies would even be doing better than they're doing right now. But it takes time for it kind of to trickle down to our level. But we're doing things at Peral. We've invested some money, capital into make it run better, and it's. I think also we're going to. In my career in Mexico for 28 years, like I've mentioned before, we've done everything. Like we've bought projects, we've sold projects, we built projects and operated projects. Peral's been going now for almost 11 years. But we're always we are a fairly entrepreneurial crowd. We're not opposed to we think of all the stakeholders in building mines and how the community, as a lot of companies, most companies would now. But we also think that the market, some companies are going to go and start looking to buy people. The mid tiers are filling up with cash in their bank accounts now. So, we always have to keep those things in mind. We have a responsibility to our shareholders too. We want to give the best return, and we have a responsibility to our communities and all our stakeholders. But I feel 2025 is going to be a very interesting year. I think there's a lot of cash flowing into the companies now with these commodity prices, the producers, and they're going to have to grow. And there's going to be a lot of cash flowing into the buy side, into the institutions. So they're going to be pushing for growth. So any growth we do, it's always going to, commodity price can go down, that's for sure, and it's always going to do it in a sustainable way, and we're always going to keep that in mind that we might be in a changing market as far as the financial part of the market.
Yeah, it's been pretty exciting, obviously, with Gatos, with Silvercrest acquisitions. And yeah, I hope you're right that money does cascade down through to developers and explorers soon. But more importantly, as you just said, maybe some money returning to the sector at last. Gentlemen, I'm going to say thank you very much for your time today. Really insightful from two real CEOs doing real things with their companies. Appreciate your time. We'll speak to you soon.
Thanks, Beth.
Thank you, Matthew.